how to use channels to time the trade. How to use channels to time the trade. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of the video is how to use channels to time the trade. All right. Professional traders time the market using the slow stochastic, the trend lines, the channels, the volume indicators, and other technical indicators to time the markets. The question today is how to time the market, or how to use the channels to time the markets and avoid common trading mistakes. Alright, in this tutorial, I want to share with traders the best approach, the best step that one should take to time the market using channels. Alright, so here on my chart, you can see that I draw some channels here. I have a declining channel here. I have a pink rising channel, a blue declining channel, and a green rising channel, and also a red declining channels on my charts. How can we use these channels, okay, to enter the trade, to buy stock, commodity, and currency pairs, okay, using channels. We can use channels also, okay, to exit the trade. When we are talking about market timing, we are talking about the perfect, okay, price, the best price when one can buy, okay, and the best price when one can sell, and the best price when one can exit the trade. So market timing is about buying, knowing the best place and the best time one can buy, knowing the best time and the best place one can sell, and knowing the best time and the best place one can exit the trade. When we are talking about the best place, we are talking about the best price. Okay? So in order to draw a declining channel, we need to have 3 points. A high, a lower high, okay, and a low. It says here, have a high, a lower high, follow my cursor, and a low and a low. With these 3 points, we can draw a channel. We start joining first the high and the lower low. We draw a line, which is the blue line here, and we choose the low. We will draw at this point a line that is parallel to the first line. So we join first the high and the lower high. We have one line, and we draw another line at the low, which is parallel to the first line. If we want to draw a rising channel, we will select a low on the chart, and we will select a higher low on the chart, a low, a higher low, a low, and a higher low, and a high, a low, a higher low, and a high. With these 3 points, we can draw a rising channel. This is how we draw a channel. We can also draw an horizontal channel, but I will not talk about that in this video, okay? So here we have a declining channel, the blue declining channel, and we have a rising channel. Now, how can we use a declining channel to time the market, okay? So the first scenario is that the price is within or inside the declining channel. So you can see here, the price is inside the declining channel. How do we time the market, in this case, to sell in a declining channel? If the price is in a declining channel, and we have we have selected the 3 point, and we have a high, a lower high, and a low, and we draw a channel, and the price is in a declining channel, we will prefer the price to go down from the lower high, to go down, to form a lower low compared to this low here. So we want the price to go down to form a lower low compared to this low, okay, and then to rally up all the way to the edge of the declining channel, the upper side of the declining channel. At this point in time, we have a bearish trade setup. So we have a high, a lower high, and a low. These 3 points allow us to draw a declining channel. In order to have a bearish trade setup, the price must go down from the lower high, and to form a new lower low compared to this low. And then the price must rise up all the way to the edge of the upper side of the declining channel. If the price reaches the upper side of the declining channel, we will draw, these are the steps, we will draw an horizontal line at the point where the price is retesting the upper side of the channel. The reason why we draw the horizontal line is to combine the trend line, the upper side lines, you see here, with an horizontal, support or resistance level. We want the price to rally up to the edge of the upper side of the declining channel and to stop on or near a key support level, which is an horizontal line here. And now we have a bearish trade setup. If we have a bearish trade setup, we must now use a top-down trading method or a multiple time frame trading method. So here we have a bearish trade setup at the point where the price is retesting the upper side of the declining channel and also corresponding to the horizontal key levels. From this point, so we are on the weekly chart. This is a bearish trade setup on the weekly chart. We will now use a top-down trading method. So we can use the weekly chart for our trade setup, the 4-hour chart for our signal, and we may select the 15-minute chart for our entry time frame. Okay, that's one example of a multiple time frame trading method or a top-down trading method after one is identifying, a bearish trade setup. Okay, I want to remove my lines on this chart. I want you to pay attention carefully to everything that I'm saying in this video, because I'm not going to repeat myself in this video, and because I don't want the video to be too long. So we have the 3 point, the high, lower high, and the low. We have our channel. You can see that as the price was going down from the lower high, it did not form a new lower low compared to this low. In fact, we have equal low. So if the price did not form a new lower low before retesting the upper side of the declining channel, it is a risky trade. Repeat, it is a risky trade. In this scenario, the price did work beautifully. The price went down after forming this bearish trade setup. But here we have a risky bearish trade setup. The probability for a profitable trade here is a little bit low. It is a little bit risky because the price did not form a new lower low. It doesn't mean that if the price form a new lower low is a guarantee successful trade setup. It doesn't mean that. It means that if the price did form a new lower low before retesting the upper side of the declining channel, we have a high probability, bearish trade setup. It is not a guarantee, a bearish trade setup. It is a high probability trade setup. So this is a risky bearish trade setup. It is not a high probability trade setup. Now, once we identify the trade setup, we must use, the trading drill or a top-down trading method or a multiple time frame trading method, weekly chart, 4-hour chart, 50-minute chart, or daily chart, hourly chart, 50-minute chart, different time frames to see the whole picture. All right, it makes sense? So the price is inside the declining channel. These are the steps and the verification that we will do. Price in a declining channel, the price must go down from the lower high to form a new lower low before rallying up to retest the upper side of the declining channel. we must draw a horizontal line to see whether where the price retesting the upper side of the channel is corresponding to a key resistance level. Which one? You see here, this one. This is a resistance level because the price changing direction here. The price rally to retest the upper side of the channel corresponding to a horizontal resistance level. We have a bearish trade setup. But this bearish trade setup is a little bit risky because the price did not form a new lower low after going down from the first lower high. If the price form a new lower low and rally up to retest the upper side of the channel, it is not a guaranteed bearish trade setup. It is only a high probability trade setup. We will use a multiple time frame trading method, to manage the trade and to enter the trade and to time the market more accurately. So to summarize, to use channels to time the market in a declining channel, the price must form a new lower low after going down from the first lower high, and then the price must rally up to the edge of the declining channel corresponding to a key resistance levels. We have a bearish trade setup, a high probability bearish trade setup. Now we must use a top-down trading method, to time the market. This is about market timing using a bearish channel. All right. The opposite is also true when we are using channel to time the market. In a bullish market, we have a rising channel, we have a low, a higher low, and a high. With these 3 points, we draw our channel. So what do we want? We want a price from the higher low. Repeat, from the higher low. The price must go up. We don't want the price to go outside the channel. Here you see that it went out of the channel. We don't want the price to go out of the channel. Here you see it went out of the channel. But in normal condition, we want the price to stay in the channel, to rally up, to rally up from the higher low and to form a new higher high. So from the higher low, the price must break this resistance here and to form a new higher high in comparison to this high here. You see here? So price must, when the price is in a rising channel, we want the price to rally up to form a new higher high, but the price must stay within the channel. Here you see it went outside the channel. This is a different scenario. So preferably, we prefer the price to stay in the channel and to form a new higher high. If the price form a new higher high compared to this high, we want the price now to pull back from the new higher high to the edge of the lower part of the rising channel. If the price, drops down to the lower part of the channel, what do we need to do? We need to drop straight away. We need to draw an horizontal line. We want a key support level. So if the price, you see here, so 1, 2, 3, allow us to draw a channel. Now the price going now from the higher low, forming a new higher high. We want the price to pull back on the edge of the lower part of the channel, and we will draw the horizontal line. If the horizontal line corresponds to a key levels, either key support and resistance level, that's a high probability bullish trade setup. Price must form a new higher high before pulling back to retest the lower part of the channel. That will form a high probability bullish trade setup. If we have a high probability trade setup, we will now use a multiple time frame trading method, to time the market. So first condition, we want 3 points, a low and a higher low, plus a high. With these 3 points, we draw our green channel. We want the price to go up from the higher low and to form a new low, a new higher high in comparison to this high here. But we do not want the price to go outside the channel. Here you see it went outside the channel. The price found a resistance here after forming a new higher high and pull back to the edge of the lower part of the rising channel, we have a higher probability bullish trade setup. We are on the weekly chart, so we'll use weekly chart, 4-hour chart, 50-minute chart. This is a multiple time frame trading. After identifying a bullish trade setup that is formed within channel, the price, repeat, must stay within the channel. It makes sense? Now pay attention to this red line here. You see the red channel. Down we have a declining channel. Okay? Pay attention. So we join this point. So pay attention carefully. Okay? We have this high here. Okay? We have a lower high. So we draw our first red lines. And we have a low here. Okay? Now the price must go down from the lower high to form a new lower low. You see here, it went down, but it went 1, 2, 3, forming a new lower low. Okay, it formed a new lower low. Price rallying up to retest the upper side of the declining channel. What do we need to do? We need to draw an horizontal line. Why? Because if the price goes above the horizontal line, we don't want to sell it. Though the price, this is like a warning line. Okay? So you see here, so as the price display a lower low, so we have a lower high, and the price went down from the lower high, forming a lower low. Now, the price is retesting the upper side of the channel, yes or no? But we must draw the horizontal line, which is the blue line here, which is our warning line. This will form a higher probability bearish trade setup. Here you can see that it was not successful. The price went down a bit, but quickly went up. If you fail to use a top-down trading method, a multiple time frame trading method, you end up losing. That's why it's so important to use a top-down trading method. This will allow you to flow with the price instead of forcing it. So here, a trader that is using, after identifying a very high probability bearish trade setup, a trader that is using a multiple time frame trading method will know that, okay, the music has changed and the price returned back above the horizontal line. So he went above it and retest it. It's time to buy, not to sell anymore. And also the price what? Outside the channel. Repeat, the price must stay within the channel. If it's outside the channel, you know that the music is changing within the channel. All right? Now, there is another declining channel here. Pay attention to the blue line here, the blue channel here. So we have a high. Okay, we talked about this one already. Here, there is another one here. It's quite fast. The price went down very, very fast. You will see that sometimes new traders may find it very difficult to trade. There was a high, a lower high, okay? And the price went down, just went down non-stop, you see? I will talk about this one in another time because there are more to this. We'll use the support level because the price is going from one resistance level to a support level. So in this case, we use support level. Price D below a support level and rally up to retest the support level. That's how we will sell in when the price is running very fast. Okay? It makes sense? Now pay attention to the pink rising channel here. Here again, pay attention. We have, okay, a low and a higher low, okay? And we have a higher high, okay? So we have our pink line. The price must now go up from the higher low to form a new higher high. Where is it? Okay, pay attention carefully, my friend. This is the new higher high, this one here. It makes sense, this one? So a low, a higher low, and a high. These 3 points allow us to draw the pink channel. Now we want the price to rally up to the edge of, to stay within the channel, very important, must stay in the channel. If you forget that, forget about this video, okay? Do not forget, the price must not come out of the channel. Okay, it's staying in the channel, forming a new high. Now it's pulling back to the edge of the rising channel. This is a high probability bullish trade setup. Here you can see that the price did not go up at all. But what has happened? The price is outside the channel. If the price is outside the channel, you know that you cannot apply the strategy. So as the price is pulling back to the edge of the rising channel, what do you need to do? You will draw what? The horizontal line. Do not forget the steps. As soon as it displays a new higher high and pull back to the edge of the lower part of the channel, right here, we draw the horizontal line. Is it corresponding to a key level? Which one? This one, you see the price changing direction here. Yes, it's corresponding to the key support level, a key level. Okay, we have a high probability bullish trade setup. What do we need to do? We must use a top-down trading method, a multiple time trading method, otherwise we can be in trouble. A high probability trade setup is not a guarantee high probability trade setup. So if we use a top-down trading method, we will avoid this trading mistake, selling or buying when the price is going down. Okay, you don't want to buy when the price is going down. We don't want the price to come out of the channel. So the warning line, which is the horizontal line, and the channel itself are giving us a warning. We don't want the price to come out of the channel. If it come out of the channel, you know that, okay, there is a trouble ahead, it's likely, okay, to continue to go down. The same thing we say, if it's going up, we don't want the price to go outside the channel before pulling back to the edge of the lower channel. If we pull back near the lower part of the rising channel, we will draw the horizontal line. We don't want the price to break below the horizontal line or to come out of the channel. This is how one can use channels to time the trade. Next step, how do we trade it when the price is outside the channel? So here, look carefully. So we have a low, a higher low, and a high. Okay? With these 3 points, we can draw our green rising channel. But this time, the price rallied up and went outside the channel. It makes sense? Now, the first one that we have discussed, we don't want the price to go outside the channel. But now, if the price goes outside the rising channel, what do we need to do? The price outside the rising channel and pull back to retest either the top of the channel or the median line of the channel. Either the top or the median line of the channel. If the price is retesting either the top, right here, you see here, you pull back and retest the top of the rising channel. This is a high probability bullish trade setup. We will draw the horizontal line. You see the line. I'm extending it now to see whether it's corresponding to a key levels. Okay, you see here, it's corresponding to this support level. You see this support here, follow my cursor here. So prior rally outside the channel is no more inside the channel. Now, if you pull back to retest the top of the channel, we draw the horizontal line to verify that it's corresponding to a key level. We have a high probability bullish trade setup. Again, to avoid losing trade or trading mistake, we must use what? A top-down trading method. So you see this on a 4-hour chart. You will use a top-down trading method. 4-hour chart, 15-minute chart, and 5-minute chart, something like that, okay? Or 4-hour chart, 30-minute chart, 5-minute chart. All right? Multiple time frame trading method. See, went up a little bit on the weekly chart before coming back down. The same thing is true if the price is outside, okay, a declining channel. So you see here, the price went down outside a declining channel. We want to look for opportunity to sell either on the edge of the lower part of the declining channel. So price went down outside the channel, retesting the lower part of the channel. If that is happening, do not forget to draw your horizontal line. If it goes above the horizontal line, you know that the music changes. So you see here, it went outside the channel, rally up to the edge of the lower part of the channel. This is a high probability trade setup. But if it goes above the horizontal line, the music has changed, my friend. Here again, you use a top-down trading method. So the horizontal line and the top-down trading method will allow you to control the risk and also to make excellent trading decisions and avoid losing trades. Okay, so that's one place we can sell if the price is outside a declining channel. The second place where we can look for opportunity to sell is the media line of the channel. So the price is outside the channel like you see here, and now it returned back inside the channel, failed to find a support here, but now we look for opportunity to sell on the edge of the media line of the channel. Again, if the price is testing the media line of the channel, of the declining channel, we will draw what? The horizontal line. Remember, the horizontal line, if you forget it, the horizontal line and, okay, the top-down trading method, because this is a bearish trade setup. Now, we use the top-down trading method, very important, and the price must not go above, okay, the horizontal line here, somewhere near the median line of the declining channel. It makes sense? It is also powerful. All right? It is also powerful. So here, if it goes above the horizontal line, you know that the music is changing. But the top-down trading method and the horizontal line will allow you to make a profitable trade after identifying a high probability trade setup. If the price is in the declining channel, the price must form a new lower low before retesting the edge of the lower part of the declining channel or the median line of the declining channel to form a high probability trade setup. The attention is on the new lower low in a declining channel, and the attention is on the higher high in a rising channel. Okay? So here we can see in a rising channel, the price went outside the channel, forming a new higher high compared to the previous high. Okay? It's a new higher high compared to this high here. So we want to buy, we can buy somewhere near the edge of the upper side of the rising channel. We must not forget the horizontal line, extend it to see whether it's corresponding to a key levels. All right, that will form a high probability setup. But in order to achieve profitable trade using channels to time the market, we must use a multiple time frame trading method or a top-down trading method. It makes sense? It is also powerful. If you have any question, put it below and we will come back to you, okay? So to summarize this video, how do we use a channel to time the market? Okay? If the price is within the channel, it's not outside the channel. The price is inside the channel. We want the price, okay, inside a rising channel or inside a declining channel. If the price is inside a rising channel, we want the price to rally up from the higher low and to form a new higher high. If the price did not form a new higher high, it is not a high probability trade setup after the price pulled back near the edge of the lower part of the channel. So the price must rally from the higher low to form a new higher high and then to pull back on or near the lower part of the declining channel. Now we will draw the horizontal line and use a top-down trading method. Sometimes the price may not rally, may not pull back all the way to the edge of the declining channel. Sometimes the price will find a support on or near the median line of the rising channel. If that's the case, we'll draw again the horizontal line. So suppose the price rally and stop near the median line here. We'll draw again the horizontal line to see whether that is corresponding to a key level. And then we'll use a top-down trading method. So anytime we use a channel to time the markets, either on the edge of the lower part of the rising channel or near the median line of the rising channel, we must use the horizontal line and, okay, a top-down trading method. This will allow us to avoid trading mistakes. On the other hand, in a declining channel, we want a price, okay, to form to go down from, okay, the lower high, okay, from the lower high. So here, this one was not, okay, so from here, suppose we were here, to form a, from the lower high, the price to go down and form a new lower low within the channel. The price must stay within the channel. Okay? So from the lower high, price went down to form a new lower low compared to this low here. Now the price must rally up to the edge of the upper side of the channel. We will draw the horizontal line and use a top-down trading method. You can see that here, the price did not go all the way to the upper side of the declining channel, but stopped on or near the median line. Once again, we will draw a horizontal line here to see whether that is corresponding to a key level. So here, you see, it went down from this lower high all the way to the lower part of the channel, but stop at the median line. We will draw the horizontal line and extend it and see whether it's corresponding to a key level. You see this where the price changing direction, here changing direction. So it's a key level. So if you're testing it here, we have a high probability bearish trade setup, not on the upper side of the declining channel, but this time on or near the median line of the channel. We don't want the price to go above the median line, and we will use a top-down trading method to manage the trade. See, it went down fast, pull back again to retest it, and then continue to go down. It's not straightforward. Sometimes you can sell, take profit, come out, price will bounce up again, and then you will look at for another opportunity to sell. Okay? All right? So we have said the most important thing that we need to say in this video, how to use the channels to time the trade, whether one is trading stocks, commodity, futures, options, or currency pairs. Okay? If the price is outside the channel, for instance, if the price is outside a rising channel, we can look for opportunity to buy on or near the upper side of the channel, but we must draw the horizontal line and use a top-down trading method. We can also look for opportunity to buy if the price is outside the rising channel. Repeat, outside the rising channel. We can also look for opportunity to buy on or near the median line of the rising channel. Again, we will draw the horizontal line and use a top-down trading method. Repeat, we have two scenarios, inside the channel and outside the channel. How can one can use channels to time the trade when the price is confined in a rising channel or in a declining channel, okay? Now, how one can use channels to time the trade if the price is outside the channel, either a rising channel or a declining channel. Now, you may ask me the last question, George, how do we trade if the price is in a horizontal channel? The same thing we do. If the price is in a horizontal channel, it's consolidating. So trader will look for opportunity to sell on the upper side of the channel, and we look for opportunity to buy on the lower part of the channel. But to avoid trading mistakes, one must look if the price, for instance here, went up to retest. So again, 3 points we need to use before we can confirm that we have a consolidation. 1, 2, 3. Okay. So now the price rally up in a horizontal channel to retest the upper side. This is okay, a bearish trade setup. Now we must use a top-down trading method to look for opportunity to sell on the upper side of the channel. And again, we must use a top-down trading method to look for opportunity to buy on the lower part of the channel. So if we sell here, we must look for opportunity to take profit here. Once we take profit, we must now use a top-down trading method to look for opportunity to enter the trade, to time the market accurately, to buy here, and the price will go up here. And then we will look for opportunity to time the market again, right here, to look for opportunity to sell, use the top-down trading method. So if we buy here, we must exit the trade here. So timing the market is about knowing where and when one should buy, and also when and where one should exit the trade. It's also about knowing when and where one can sell, and when and where one can exit a bearish trade. All right? I hope you have learned something from this video also about how to use channels to time the trade. Either the price is within the channel or outside the channel. If the price is outside the channel, we are talking about breakout out of a rising channel or breakout out of a declining channel. If you like this video, please give us the thumbs up. If you dislike this video, please give us the thumb down. If you love this video, please feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, feel free to subscribe to our channels. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use the channels to time the trade. Speak to you soon.